We closed 19 on an all-time high, 6% top line, 15% bottom line growth, 15% growth in China and 34% growth in online. So a very, very strong quarter. What we did see by the end of January, we saw, like any other company, a complete close down. So that meant that about 80 to 90% of our business stopped overnight, and we lost about 100 million revenue on a weekly basis. That is now starting, to slightly pick up. But in the sporting goods industry, you're really at the end of the food chain. So that means, of course, people, when they start shopping again, will buy normal stuff, food, drinks, detergents, before they, buy the sporting goods. And that is what we're seeing in the, so far in the first quarter. The upside is that the fundamentals hasn't really changed in the sporting goods industry. It's a setback, but fundamentally nothing has changed. But it's a painful setback.
Absolutely. What about the supply chain? Has there been any disruption to factory closures in China?
Very minimal, because it happened around the Chinese New Year, where a lot of the Chinese factories were closed anyway. We do about 23% of our business in China, and 19% of our manufacturing capacity is in China. So if you look upon it in the bigger picture, there's been some, quote, noise, but there's been really nothing that is changing the bigger picture from a supply chain standpoint, not for our industry.
What is your sense as to whether factories are back online in general for apparel and accessories in China?
No, so for the visibility that we have, the factories are completely online, and so are the distribution setups. So all the factories, all the distribution is running. Of course, we need to get the consumer to start buying again. As I said, if you've been sitting 2 weeks in an apartment, your first thought is not to buy new pairs of running shoes. Your first thought is probably do some very basic shopping. And that's why, as attractive as the sporting goods industry is, we'll probably have a bit of a lag compared to other consumer goods products. But as I said before, it doesn't really change the bigger picture, which is still very positive.
What about sales in Europe? What have you seen in recent days and weeks as the coronavirus has spread there?
Oh, very little impact at this stage. What we are seeing a slight slowdown in physical traffic. We're seeing an uptick in on the online traffic. The real country that is impacted is, for obvious reasons, Italy. But the overall shopping picture has not fundamentally changed in Europe. You are seeing, as I said, a slight slowdown.
One of the questions Wall Street is grappling with is Europe in recession? How do you answer that?
There's no doubt that the European economy will be impacted what's going on right now. Whether it'll go into a recession, it's been the lowest growth economy for the last couple of years, and I think that the European banks right now are issuing credits and lowering the price of money. However, the big difference to 2008, when the financial crisis was around, it was a cash-constrained market with a very high price point. Right now, people can get access to money. The price is very low, so it is going to be harder to put a stimulus in to the European economy to get it to grow.
What about the U.S.? Are you seeing any impact here in the States yet?
At this stage, not. What is, I think the biggest impact is right now the concern that people have, and that's also the same in our company. Our biggest concern is really for our people. How do we make them feel safe, feel that they understand what's going on? Because the uncertainty is right now bigger than the substance. That might change over time, but right now it's getting the right information out.
How are you doing that? Assume you have to do that both with your consumers and your employees. How do you make them feel safe?
So for our employees, we communicate with them every day. Everything we communicate are public information, so we don't speculate information. We're very fact-driven. We've been very clear on what happens if we have a case within our company, which we had. So we isolate the setup where they are. We have the people test. We bring them out of the company. So we really take care of them, because this is going to happen to every large company in the world at this stage. So being transparent, being open, and make people aware of that we care and that we do try to work out solutions should something come. And for a lot of the people that feel unsafe, we let them work from home. That's what technology allows you to do. And so that's also what we're, making happen for our people.
How many employees would you say do you have globally working from home right now?
Now, right now, it's still a very small part. So we have about 60,000 employees, and I would guess that less than 10% is working from home. But of course, if you have an instance, that number, of course, dramatically goes up. But right now, most of our people here in Herzogenaurach are working from, 95% are working from the office because they feel safe, they feel well taken care of. And should the situation change, and should we have an instance here, of course, we'll move to a different plan. But what we have to do is we have to make sure that we, maintain the focus at our business while taking care of our employees, because we still have a business to run. And for the vast part of the world is still not impacted on the coronavirus. So that is also a fact.
So in places that are impacted, have you seen an uptick in online spending? And do you need to make any adjustments to meet that?
So we have seen a delayed uptake. So in the beginning, there was a complete downshift because no logistics works. So what we are seeing now, we are seeing a higher traffic. So if you look in China, while our overall business is substantially down, actually the traffic on our website is up double-digit compared to last year. And that's where you start seeing the change in the consumer, that they might want to start shop again, but they don't want to go to the store, so they are moving online. So this is going to force a quicker transformation to a more digital environment, which is what we invested in the last 4 years and made huge progress on. As I said, we grew our online business last year 34%.